Imagine yourself in 2008, staring at the stock chart of Lehman Brothers. The numbers are bleeding red, yet some analysts claim the price doesn't reflect the true value underneath. Here's the twist. Valuation isn't just a number crunch. It's a detective story, full of clues and traps. How do you peel back the layers hiding real worth? That's exactly where Aswath Damodaran takes you in the little book of valuation. You've seen price tags on stocks, but value, that's a whole different beast. The first challenge? Separating market hype from true worth. Let's dig into how valuation slices through the noise. Back in 2008, Lehman Brothers was hemorrhaging cash and teetering on collapse. Damodaran walked through their financials and discovered that despite the plummeting stock price, the firm's underlying value, based on cash flow projections, was far from zero. This story highlights how panic can drive stock prices below intrinsic value, giving savvy investors a window of opportunity. Think of discounted cash flow, DCF, valuation as a time machine for money. You're forecasting all the cash a company will generate in the future, and then bringing it back to today's dollars using a discount rate. It's like knowing the weather next week and adjusting your plans accordingly. Except here, it's your money's future worth you're estimating with precision. Most investors fixate on price like it's gospel, but price is just what the market's crowd feels right now, often irrationally thrilled or terrified. Damodaran reminds us investors that price is a headline, value is the deep story behind it. Knowing the difference means you're not surfing waves, you're steering the ship. You want a quick fix? Multiples like PE ratios offer fast valuation, but here's the snag. Like shortcuts, they're tempting but not always reliable. Let's see why. Damodaran shares the tale of tech stocks in the late 90s, where average PE ratios soared into the triple digits. Investors blindly trusted these multiples, ignoring underlying cash flows, leading many to bet on bubbles and lose fortunes. It's a warning. Averages hide extremes, and extremes hide danger. Think of multiples like a snapshot at a party. It captures a moment but misses the conversation and mood. A PE ratio tells you the price relative to earnings, but doesn't reveal earnings quality, growth potential, or risk. It's fast but shallow, like judging a novel by its cover photo. During the dot-com crash, companies with sky-high multiples suddenly saw those numbers evaporate overnight. Multiples aren't just numbers. They reflect optimism, which can swing wildly. Damodaran's insight. Multiples are risk signals disguised as easy math, a red flag you can't ignore. Valuation isn't just arithmetic. It's a playground for imagination. Real options let you value flexibility and future choices, turning uncertain risks into potential gold mines. Let's crack this overlooked treasure. Damodaran illustrates with an oil company deciding whether to drill or hold. This option to wait, drill, or abandon isn't captured by traditional methods. It's like owning a ticket that might become priceless depending on the discovery's size. A classic real option adding real value beyond static calculations. Imagine valuation as a chess game where each move is a decision opportunity. Real options give companies the power to adapt, delay, or expand projects, turning valuation into a strategic game. This shifts thinking from what is to what could be, opening richer investment possibilities. This approach transforms fear of uncertainty into opportunity. Instead of dread over unknowns, you price in flexibility and response. Damodaran's insight? Investors who master real options see hidden assets where others only see risk, flipping the script on investment decisions. Remember Lehman's fall from panic-driven price to intrinsic value clarity? That puzzle guides every step you take with valuation. From time machines to chess moves, you're equipped to see companies like a detective, not a gambler. Try this. Pick a stock you know and run a simple discounted cash flow today. It's your first step to owning the story, not just the price. Subscribe for more book summaries like this one.